Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools Karl Thiel and Keith Speights giving a 1 to 10 rating to a company that no longer sells the products consumers most know it for. It's Johnson & Johnson, ticker symbol JNJ. First, we'll rate the strength of J&J's business, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Karl and Keith, you're both at 7.5s.
Right. At one point, Johnson & Johnson probably would have come close to being invincible. This company began operations way back in 1887, still going strong. J&J's continued investments in R&D and its financial flexibility to make acquisitions should keep it humming along for a long time to come, too. But the company does face some challenges now. It's losing patent exclusivity for several drugs. Doesn't have that cushion that its consumer products provided in the past either.
Yeah, it's been 2 years since they spun out Kenvue, which was the consumer health leg of the stool, and that could be a real comfort to investors in tough times. But they still have the drug leg and the device leg, and it's a very stable business. They have a 63-year track record of increasing their dividend, and if you've been paying attention to the news about potential pharma tariffs, I don't think we're going to do something as stupid as implement 150% to 250% tariffs. But generally speaking, J&J is better situated than most companies with a lot of manufacturing in the U.S., a little more exposed on the device side. And then in terms of patent cliff, I think they're better positioned than many other companies. The biggest hit is just about to come right now, so I think it's largely priced in. Otherwise, that's Stelara. Otherwise, they're in pretty decent shape.
In case you're wondering, Kenvue's got Band-Aids and Listerine and Tylenol, all those kind of products. And so that's spun out. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Karl's at a 7. Keith, you're at a 6.5.
I might be too harsh on Johnson & Johnson's management team with this score. However, I think executives didn't handle the talc and opioid lawsuits very well. The stock has also been a laggard in recent years. On a positive note, I like the acquisitions of Biomed and Shockwave Medical, although the company might have paid too much for Biomed in particular.
Yeah, I gave him a 7. Joaquin Duato, he's been there since 2022, but he's a 34-year veteran. Yeah, they've underperformed the market, but so has pharma overall. He oversaw the Kenvue spin out, which I think was a decent move, and I think they're managing their patent situation pretty well. They're guiding to low double-digit pharma CAGR, compound annual revenue growth over the next several years, and 10 major approvals. So I think they're well set up.
Financials, a 10 is a fortress, a 1 is yikes. Karl, you're at a 7. Keith, you're at a 7.5.
Johnson & Johnson is a fortress in some ways. It has strong margins, tremendous free cash flow, hefty cash position. Its earnings are growing fairly robustly, I would say. What isn't so fortress-like is revenue growth of only 5.8% in the last quarter. Total debt, that's more than twice the company's cash position.
Yeah, their balance sheet is in fine shape. I mean, they have over $50 billion in total debt, but it's a decent multiple to EBITDA, so they have flexibility if they want to do more M&A. And I have to say, J&J is a company I've been kind of grateful to because they've acquired a number of companies that I've been on the other side of, including Momenta, which they got a steal on, by the way, Shockwave, and Biomed.
Karl, let's talk valuation. How well will Johnson & Johnson stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
I said 5 to 10%, but I would say probably at the upper end of that, with the possibility of doing even a little better. So in other words, I see the stock doing better than the actual top line growth of the company, which is probably going to be less than that. It's just a massive incumbent, but it's underperformed for the last 4 or 5 years. So their PE ratio has gone down to historically pretty low levels. I mean, not, it's kind of touched down here a couple of times, but generally speaking, you had to go back to the early 90s before they were really consistently trading at these levels. So, I think they're just a sort of reversion to mean could help them a lot. And I gave them a safety score of 8.
Yeah, the company's management has projected average revenue growth of 5%, 7% through 2030. Assuming that's about right, and I do think it's about right, the stock will probably track with that level roughly. So we're looking at share price appreciation between 5% and 10%. And as for a safety score, I'll go with an 8, especially if we can throw J&J's highly reliable dividend that currently yields right around 3% into the mix.
Thank you to both Keith and to Karl. They've given J&J an overall score of 6.9 out of 10. With kind of mediocre returns expectations. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is eBay. Till then, Fool on.